Something is about to break in the stock market, and almost nobody sees it coming. The numbers are right there in front of us, the charts are screaming, the history books are open, and yet everyone keeps pretending that everything is fine. But it isn't fine. It's fragile. It's stretched to the absolute limit, held together by invisible threads that are starting to shake. You can feel it if you look close enough, if you listen to the cracks beneath the noise. For years, the market has climbed higher and higher, defying gravity, defying logic, defying every warning that reality tried to send. People believe it will never end, that this time is different, that somehow we've escaped the laws of financial gravity. But the truth is we haven't. We've only delayed the fall, and every time we delay it, the fall gets bigger, the impact gets harder, and the damage spreads wider. And today we will watch if this massive crash will happen before 2026. So stay until the end to understand it. Leave a like, and let's start. Look around, stocks are near record highs, yet the economy underneath them looks like a house built on sand. Companies report record profits while laying off thousands. Consumers are drowning in credit card debt. Governments borrow more money than they can ever repay. And through it all, the market keeps climbing, as if it's immune to consequences. But ask yourself this: what if this isn't growth? What if what you're seeing isn't a strong economy at all, but a desperate illusion created to keep confidence alive? Because that's what the system feeds on. Confidence. The moment people stop believing, the whole thing collapses. Right now, the total value of US public companies stands at around $66 trillion. That's more than double the size of the entire American economy. The country's GDP is about $30 trillion, which means that the market is valued at over 200% of the real economy. 200%. To put that into perspective, during the dot-com bubble of 1999, the number was only 115%. Back then, that level of overvaluation led to a crash that erased 60% of the market. But now, we're far beyond that. We're in uncharted territory. Every historical comparison says this should already be collapsing, yet somehow it isn't. Somehow the illusion keeps going. And here's where it gets strange. Some of the biggest companies in the world, the ones that drive the indexes everyone watches, are trading at price-to-earnings ratios of 60 and above. That means investors are paying $60 for every single dollar those companies actually earn. It's like paying $60 for a $1 meal and convincing yourself it's a bargain. It's absurd. But it keeps happening because people no longer invest in value. They invest in belief. They invest in the illusion that prices will keep rising forever, that someone else will always pay more tomorrow. But illusions don't last forever. They need constant fuel. They need money, real or printed, to keep the engine running. And that's where the secret lies. The real reason the market hasn't crashed yet isn't because the economy is strong or businesses are booming. It's because the system is being flooded with liquidity, money that doesn't actually exist, created from nothing, borrowed from the future to make the present look alive. Every year the government collects about $5 trillion in taxes, but it spends much more, at least $2 trillion more than it has. That shortfall doesn't come from nowhere. It's created, borrowed, printed, injected into the economy to keep everything moving. And where does that money end up? It flows into people's pockets, into corporate profits, into financial markets. It circulates through the system, lifting stock prices, making everything appear stronger than it truly is. When consumers spend more, companies earn more. When companies earn more, their stock prices rise. And when stock prices rise, people feel richer and spend even more. It's a loop of artificial prosperity, a circle that feeds itself until the source of money dries up. But here's the catch. That money isn't infinite. It's debt. It's time stolen from the future. And one day, the future comes to collect. The truth is, the United States became the center of global finance, not just through innovation or productivity, but through its ability to borrow endlessly and remain trusted while doing it. After World War II, America's power came not just from its military, but from the dollar, a currency that became the foundation of global trade. Every nation needed dollars, every market depended on them, every central bank stored them. That demand allowed the US to print and spend without immediate collapse. But that foundation is cracking. Slowly, quietly, other countries are building systems that don't depend on the dollar anymore. They're trading in their own currencies, storing gold, creating digital payment networks outside US control. The world is changing, and that change weakens the illusion holding the market up. Just a quick break, I opened a free Telegram community where I teach how to earn money with YouTube and build channels like the one you're watching. If you want to understand how to do it, there's the link below. Back to before. To keep control, the US has only one option. Keep spending. Keep the economy warm even if the fuel is running out. But every new dollar printed steals value from the ones already in circulation. Imagine an economy with $10 total. If the government suddenly prints another 10, every dollar instantly becomes worth less. That's inflation. It's not just higher prices, it's quiet theft. The dollar loses power, and the people holding it lose purchasing strength. But here's the twisted part. Inflation doesn't scare investors. They've learned to use it. When prices rise, companies appear to earn more. Their revenues grow, not because they're selling more, but because everything costs more. The illusion of growth is created, and the market celebrates it as success. It's like watching a thermometer rise and calling it progress. A company that once made $10 on a $100 sale now makes $20 on a $200 sale. It looks like profits have doubled, but the reality hasn't changed. Nothing new was created. The product didn't improve. The business didn't expand. It's just inflation dressed up as achievement. And that illusion keeps the market alive because numbers on screens are all most people see. They don't feel the silent erosion underneath. They just see lines going up and assume everything is fine. But while the illusion comforts the many, it enriches the few. The richest 10% of Americans own the vast majority of all stocks. When inflation drives up asset prices, they win twice, once from their growing portfolios and again from the widening gap that separates them from everyone else. Meanwhile, the middle class sees prices rise faster than wages. The cost of living outpaces income. Savings lose value every day they sit still. Ordinary people are told to work harder, save more, invest what little they have, while the very system they're investing into quietly bleeds them dry. And who stands at the centre of this machine? The banks. The same institutions that issue the debt, manage the liquidity, and whisper softly that everything is under control. They lend the money, they collect the interest, they profit when markets rise, and they profit again when everything falls apart. They are not in the business of balance, they are in the business of control. Every crisis, every bailout, every rescue plan, every printed dollar flows through their hands, and that's why they don't want you to see what's coming. Because the system they've built only works as long as people stay asleep, as long as you believe the illusion is real. When confidence breaks, when belief fades, the entire structure trembles. And make no mistake, it's trembling already. Debt is exploding, productivity is slowing, and the money keeping it all alive is losing value faster than anyone wants to admit. The government is addicted to spending. Corporations are addicted to cheap money, and consumers are addicted to credit. Everyone is leveraged against a future that may no longer exist in the way they imagine. Look closer at the market today. It doesn't move with logic anymore. Bad news sends stocks higher because investors think it means the Federal Reserve will intervene. Companies announce layoffs, and share prices rise because that means cost cutting. Entire sectors struggle while indexes still break records. This isn't natural behaviour, it's dependence. The market isn't a reflection of the economy anymore. It's a reflection of policy, of belief, of manipulation. And that makes it more dangerous than ever, because when systems depend on illusion, collapse is not a question of if, but when. The illusion looks perfect from the outside, bright, ordered, unstoppable. But underneath, the gears grind and the bolts strain. Government debt is near levels once considered impossible. Corporate borrowing is exploding. Consumers are maxing out credit just to survive. Wages can't catch up, and interest rates are suffocating small businesses. All while investors celebrate record highs, convinced that the storm will never reach them. It's the same story every time in history. Euphoria before disaster, confidence before collapse. And each time the signs are there, hiding in plain sight, ignored because they don't fit the story people want to believe. But reality doesn't need permission to arrive. It comes suddenly, brutally, without warning. It starts with small tremors. A few missed payments, a struggling bank, and a dip in confidence. Then one event, One spark turns fear into panic. That's how crashes always begin. Slowly at first, then all at once. The numbers start to fall, the charts turn red, and the same experts who said everything is fine suddenly claim nobody could have seen it coming. But deep down, everyone knew. They just didn't want to face it. And here's what makes the coming one different. The system is far larger now, far more complex, far more interconnected. When one part breaks, everything else feels it instantly. It's not just about Wall Street anymore. It's about currencies, governments, global confidence. One shock can ripple through the entire planet in days. And the higher we climb, the thinner the air gets. The system is not invincible. It's just inflated beyond recognition. For now, it still holds together. For now, the music still plays, but it plays in a room filled with smoke, and the exits are closing fast. The signs are there. Overvaluation, debt saturation, false growth, and blind optimism. The illusion looks perfect until the moment it doesn't. And when that moment comes, there won't be time to react, only to realise that it was never real to begin with. The market we see today isn't thriving, it's surviving. It's being kept alive by the constant injection of borrowed money, by the manipulation of confidence, by the denial of reality. Every rally is built on the same fragile hope that tomorrow will be like today. But the truth is, tomorrow is already changing. The cracks are spreading, the pressure is building, and the illusion is wearing thin. And as the numbers rise, so does the danger, because what's inflating the system isn't strength, it's desperation. Desperation to keep control, to avoid the reckoning, to protect the illusion that everything is fine. But no illusion can last forever. Every bubble, every empire, every fabricated stability ends the same way. Quietly at first, then violently. And when that moment comes, it won't just be a correction. It will be the consequence of everything ignored for too long. Because the stock market doesn't rise forever. It only appears to, until it doesn't. And when gravity returns, it doesn't ask for permission. It simply takes back everything that was borrowed. That's what people forget when the market feels unstoppable. It isn't erasing risk, it's only postponing it. And every delay adds weight to the fall. Because behind the glow of record highs and cheerful headlines lies a machine powered by fear, by control, by a quiet coordination of forces that most people never see. The banks know this, the institutions know this. The insiders who move billions while pretending calm know exactly what's happening. Because the system isn't reacting to reality anymore. It's being managed, guided, engineered. And the truth hiding beneath it is darker than anyone dares to admit. You see, the market doesn't move because companies are growing. It moves because liquidity flows where it's allowed to flow. And those flows aren't random. They're controlled by a handful of hands. Every rate decision, every policy statement, every sudden shift in tone from the Federal Reserve ripples across the planet. When the Fed raises rates, everyone pays more. On mortgages, on loans, on credit cards, on everything. They say it's to fight inflation, but what it really does is transfer power. Higher rates don't just slow spending, they increase profits for the banks. When you pay more interest, they collect more money. And when defaults begin, when people can't keep up, those same institutions step in to buy what's left at a fraction of its value. That's how the cycle works. During the boom, they lend freely. They tell you money is cheap, that the future will be brighter, that leverage is safe. Then, when the system starts to crack, they tighten. Credit dries up. Liquidity disappears, panic spreads, and they watch from above as assets crash. Then they buy back what they once sold, rebuilding their positions at pennies on the dollar. It's not just finance, it's strategy. A century-old cycle that repeats because the same forces always pull the strings. But this time, something feels different. The stakes are higher, the system more fragile, the world more connected. Every sector, every country, every person is tied into the same digital bloodstream of money. And that makes the illusion harder to sustain, but also harder to escape. The banks can't afford to let the market fall completely, because they know what would happen if faith disappears entirely. That's why everything now depends on managing belief. Not growth, not productivity, but confidence. Confidence is the new currency. It's the invisible force that holds everything together. As long as people believe the market will survive, it does. As long as they believe their money is safe, they leave it where it is. But belief can't be measured, and it can't be printed forever. Once it breaks, no policy, no speech, no emergency measure can stop the unravelling. And that's why every major announcement from central banks feels like theatre, words meant not to fix the problem, but to buy time. Are you enjoying this video? If so, let me know in the comments, and remember that you can create videos like this too by joining my free Telegram community using the link below and earning money from it, back to before. You've seen it. Every time panic spreads, someone steps forward to calm the storm. A headline saying the Fed will act if needed. A politician claiming the fundamentals are strong. A sudden rally right after a bad report. These aren't coincidences. They're signals, carefully placed to keep the illusion breathing. But here's the danger. Every time they do it, they lose a little more control, because the public starts to see the pattern. They start to realise that stability isn't real anymore, that it's just being simulated. And once people understand that the calm is fake, the calm is gone. The system is fragile because it has forgotten how to operate without intervention. Free markets were supposed to balance themselves, but now they rely on rescue. Companies depend on buybacks instead of innovation. Governments depend on debt instead of discipline. Consumers depend on credit instead of income. And the market depends on hope instead of reality. That's not strength. That's survival dressed as prosperity. Behind closed doors, the largest institutions are already preparing for the end of the illusion. They won't say it out loud because that would trigger it instantly, but their actions reveal everything. Quietly they are hedging, repositioning, reducing exposure. They're moving money from risk into safety, from equities into commodities, from growth into hard assets, from trust into insurance. Gold purchases by central banks are at their highest levels in decades. Why? Because they know fiat confidence is slipping. They're protecting themselves before the public realises what's coming. Meanwhile, ordinary investors are told to stay the course, to keep buying the dip, to believe that every correction is just an opportunity. It's the same story before every collapse. The professionals exit quietly while the public keeps the faith. They sell you the illusion right up until the moment it breaks, then they buy it back from you at a discount. The same institutions that fuel the boom profit from the bust, because they know one simple truth: fear is as profitable as greed. The signs are already visible to anyone who dares to look. Corporate earnings are slowing. Credit card balances are at record highs. Household savings are running out. Real estate markets are showing cracks, yet stock prices keep rising. How? Because buybacks continue. Because cheap debt from the past is still circulating. Because the illusion must go on until the very last moment. The problem is that every illusion needs energy, and this one is running out of fuel. Interest rates are higher than they've been in over 20 years, yet the government still borrows trillions. Corporations refinance their debt at double or triple the cost. Consumers pay more for everything while earning the same or less. The pressure is building in silence. Defaults are starting to rise, small companies are closing, and the illusion of stability is becoming too expensive to maintain. But instead of admitting the truth, the system doubles down. More manipulation, more messaging, more distraction. They don't want you to see that the biggest players are preparing for something. They're not acting like everything is fine. They're acting like a storm is coming. Because it is. History doesn't lie. Every extended period of inflated optimism ends with a violent correction. The longer the euphoria, the sharper the fall. And right now, we're in the late stage of the biggest euphoria in modern history. The numbers are stretched beyond logic. The money supply is exhausted, and the illusion of control is hanging by a thread. But most people can't see it because the system doesn't want them to. Every chart is smoothed, every headline softened, every crisis redefined as temporary. Yet beneath the surface, the data tells a different story. Debt-to-income ratios are climbing. Business bankruptcies are accelerating. Banks are tightening lending standards. That's what happens right before the fall. The air gets thin and the system starts to gasp. Think of it like a dam holding back water. At first, the cracks are invisible. Tiny leaks appear, small defaults, weak data, a few struggling sectors. Then suddenly, the wall gives way, and what seems stable becomes chaos in seconds. Markets are the same. They look unshakable until belief collapses. Then everyone rushes to the exit at once. Prices don't fall gradually. They plunge because trust disappears faster than it can be restored. The people who will lose the most are always the ones who trusted the system the longest. They believed the promise that this time is different, that technology or policy or innovation had rewritten the laws of economics. But those laws never change. When too much money chases too little value, the result is always the same: collapse. Every bubble in history, from the tulip mania to the housing crash, was driven by the same human impulse: denial. And denial is what fuels the final phase of every illusion. The charts go higher, the voices get louder, the optimism gets blind. People stop asking questions because the truth feels uncomfortable. But comfort is the most dangerous place to be when a system is this fragile. Comfort means you've stopped paying attention. Comfort means you're about to be surprised. The banks understand this perfectly. They build the illusion, they profit from it, and when it starts to crumble, they quietly move to the other side. They are not gamblers, they are architects. And right now the architecture of the market is being rearranged. They're positioning for impact. They see the exhaustion in consumer data, the weakness in earnings, the slowing of money flow. They see what's coming. You can almost feel the unease in the air. The markets move like nothing's wrong, but beneath that calm surface, something is shifting. Liquidity is thinning. Volatility is rising in quiet corners. Big players are reducing risk exposure. Gold, oil, and cash reserves are growing. Every signal points toward preparation. And yet, the public still believes the story of endless growth. That's how illusions end. Not when the truth arrives, but when belief finally fails to hold it back. There's a strange paradox in all of this. The very institutions that created the system are now trapped inside it. They can't stop printing, can't stop borrowing, can't stop inflating. Because doing so would expose the weakness they've spent decades hiding. They have no choice but to continue feeding the illusion until it consumes itself. It's a slow-motion crisis disguised as prosperity. And every time they rescue one problem, they make the next one worse. What happens next won't be sudden, at least not at first. It will start quietly. Liquidity tightening, defaults creeping higher, confidence fading. Then one day, an unexpected spark will ignite the dry field. Maybe it's a bank failure, a government shutdown, a sudden geopolitical event. Whatever it is, it will be the moment belief collapses. And when belief collapses, the system follows. Because markets don't crash from lack of profit, they crash from lack of faith. The entire structure depends on people believing that tomorrow will look like today. The second they stop, the game ends. And that's the game the banks have been playing all along. They built the illusion, and now they're racing to exit before everyone else realizes it's over. You can already sense it. The silence before the storm, the stillness that feels too perfect. That's how every major crash begins. That's how every illusion ends. For months it looks stable, for weeks it looks unbreakable. And then in a single moment, everything flips. Confidence vanishes, fear spreads faster than reason. Screens turn red, portfolios shrink, and all the calm that people once felt disappears overnight. What once felt like control turns into chaos. And it happens not because something new appears, but because what was always there finally becomes impossible to ignore. The weakness was built in from the beginning. The collapse is just the moment the truth catches up. Imagine waking up one morning and realizing that everything you believed about stability was an act, that the prosperity you thought was growth was only a trick of the light. That's what the end of an illusion feels like. At first it's disbelief, then it's confusion, then it's panic. The market doesn't fall because people understand. It falls because they finally don't. That moment is coming closer than anyone thinks, and it will arrive long before most are ready for it. All the signs are already lined up. Corporate debt at record levels, consumer credit exhausted, government spending out of control, central banks raising rates on one side while injecting liquidity on the other, a contradiction that cannot last forever. Every action they take to fix one problem creates another. Every promise they make to calm the storm only hides the fact that they are the storm. The entire system depends on balance, but that balance no longer exists. It's been replaced by manipulation, and manipulation always breaks under pressure. People ask what could trigger the next crash, but that's the wrong question. The trigger doesn't matter when the system is already soaked in fuel. It could be a single major bank defaulting, a sudden loss of confidence in government bonds, a geopolitical shock, or a technology bubble imploding under its own weight. It doesn't even matter which one. When confidence is this thin, any spark is enough. Because the crash won't come from the outside, it will come from within. It will come from the exhaustion of a system that can no longer pretend. When that moment arrives, you'll see how quickly faith turns to fear. Investors who swore they'd hold forever will rush to sell. Funds that promised safety will lock withdrawals. Liquidity will disappear like smoke in the wind. Prices will tumble not gradually, but violently, because there will be no one left to buy. The same voices that told you to stay calm will vanish. The same institutions that promised stability will retreat into silence. And those who saw the illusion for what it was will recognize that what's breaking isn't the market itself, but the belief that the market was real. It's easy to forget how much of this system depends on perception. Every headline, every policy, every chart is built to make you feel something. Confidence, security, participation. It's theatre, and the stage is global. The actors wear suits, the props are numbers, and the story is always the same. Trust us, we have it under control. But control has limits. And when the truth finally steps onto the stage, the audience realizes it was a play all along. Look closely at the behavior of those in power. When banks start cutting exposure to risk assets, when CEOs quietly sell their shares while telling the public to stay invested, when policymakers begin talking about temporary slowdowns, those are not coincidences. Those are preparations. They know that the illusion can't survive forever. They just hope it lasts long enough for them to reposition before the collapse becomes undeniable. That's why they never warn you, because your panic would make their escape harder. And as the cracks widen, the stories will change. The same experts who once promised endless growth will start using new words. Adjustment, soft landing, temporary volatility. They'll pretend that a crash is just a phase, that it's part of a cycle, that it's healthy. But deep down, they'll know what's really happening. The machine is running out of power. The illusion of infinite growth in a finite world is dying. The question is not whether the market will crash before 2026. The question is how violently it will unwind once it starts. Because every metric suggests we're at the peak of unsustainable imbalance. Valuations beyond reason, debt beyond repair, optimism beyond logic. The pressure is immense, and when it releases, it will not be gradual. It will be global. The irony is that the same mechanisms used to delay the collapse are the ones that will make it worse. Every bailout, every rescue, every printed dollar adds to the pile of future consequences. They can stretch time, but they can't erase reality. Each cycle of artificial stability leaves the system weaker than before, because true strength doesn't come from intervention. It comes from equilibrium. And there's nothing balanced about the world right now. For the past decade, the illusion of prosperity has been built on cheap money. Low interest rates made borrowing easy, speculation addictive, and risk invisible. But that era is over. The tide has gone out, and what's left exposed is terrifying. Corporations that can't survive without refinancing, governments addicted to debt, consumers stretched to the breaking point. Everyone has built their future on the assumption that money would stay cheap forever. But forever just ended. And this is where it becomes personal. Because when the illusion breaks, it won't just be charts and numbers falling. It will be people. Jobs will vanish. Savings will evaporate. Retirements will shrink. The wealth that seemed so solid will dissolve like mist, revealing how fragile it really was. That's the hidden cost of manipulation. Every artificial boom steals from the next generation. Every bailout robs tomorrow to protect today. And when tomorrow finally arrives, there's nothing left to borrow. The banks know this, but they will survive. They always do. They have the advantage of foresight, of data, of timing. While the public panics, they will buy. They'll wait for blood in the streets, then scoop up the same assets they once sold for a fraction of the price. That's the cruel rhythm of this system. The few profit from both the rise and the fall, while the many pay for both. The crash isn't a failure for them. It's an opportunity. Like the opportunity you have to join my free Telegram community and open your YouTube channel to earn a second income. You might think this sounds too dark, too cynical, but history proves it again and again. Every major crisis ends with power consolidating at the top. Small banks collapse, big ones get bigger, small investors panic, big players absorb their losses. The illusion resets, rebrands, and begins again. The faces change, the tools evolve, but the structure stays the same. A cycle of hope and despair, engineered for profit, disguised as progress. But this time there's a new variable: speed. Technology connects markets in real time. News spreads in seconds. Panic can travel faster than any central bank can respond. That makes the next collapse unpredictable and uncontrollable. What once took months can now happen in hours. And that's what terrifies the institutions most. Not the fall itself, but their inability to manage it once it begins. So as 2026 approaches, watch not just the numbers, but the behaviour. Watch how quickly narratives change. Watch who starts talking about stability a little too often. Watch where the big money moves, into commodities, into metals, into anything real. Those are the clues. The truth never hides completely, it just speaks quietly, under the noise of distraction. There's a strange silence that always comes before a collapse. Markets stop reacting logically. People stop asking questions. Everyone feels that something's off, but nobody wants to say it out loud. That's where we are now, the pause before the fall. The calm that feels almost rehearsed, almost artificial. It's the system holding its breath, trying to convince itself that the cracks don't matter. But they do. And they're spreading faster than anyone admits. When the break finally comes, it won't announce itself. It won't send a warning. It will start with disbelief. Small dips explained away as noise. And then suddenly, the ground will disappear. The same people who said don't worry will say no one could have known. The same institutions that built the illusion will act like victims of it. And as always, the story will repeat until people finally understand that what broke wasn't the market, but the trust that built it. Because that's the truth the banks don't want you to know. The market isn't designed to make everyone rich. It's designed to keep the few in control. It rewards belief, punishes doubt, and depends entirely on participation. The illusion only works if you stay inside it. The moment you question it, you start to see the strings. You start to see that it was never about growth. It was about control. And control is exactly what's slipping away. Inflation, debt, distrust, and exhaustion are converging into something the system can't contain. The more they try to hold it together, the faster it unravels. The more they print, the less each dollar is worth. The more they reassure, the more people sense the lie. Faith is cracking, and when faith cracks, everything else follows. We're watching the final act of an illusion decades in the making. The glow is still bright, but it's fading. The promises still sound confident, but the tone has changed. You can hear the strain in every statement, the hesitation in every projection. The system is trying to convince itself that it still has control, but deep down, even its architects know what's coming. And when it comes, it won't just reset markets. It will reset trust. People will question everything. Their savings, their currencies, their governments, their beliefs about what wealth even means. That's the true collapse. Not just financial, but psychological. Because once you've seen behind the curtain, the illusion can never fool you again. So as the world edges closer to 2026, don't just watch the market, watch the mood. Fear spreads faster than data, and belief disappears faster than money. The signs are all around us. Record debt, slowing growth, overvalued stocks, and blind optimism. The script has been written, and the ending is always the same. Every boom writes the story of its own destruction. Every illusion carries the seed of its own collapse. And when that collapse arrives, it doesn't destroy everything. It reveals what was real all along. The noise fades, the truth remains, and the cycle begins again. So look beyond the numbers, beyond the headlines, beyond the illusion. The question is no longer whether the market will crash before 2026. The real question is, who will be ready when it does? Because the storm isn't coming. It's already here, it's just that most people can't feel the wind yet. Like you can't feel the opportunity to subscribe to this channel. Smash that subscribe and like button, let me know your thoughts in the comments. And I also want to remind you that if you want to build a YouTube channel, like the one you're watching now, and make money from it, I opened a free Telegram community with the link below. See you there or in the next video. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.